Hello traders, you are welcome to another video on this channel. So in this video, I'll be showing you how to trade consolidations and how to avoid being trapped in consolidation as smart money trader. So yeah, that's what we'll be looking at today. And I'll also be showing you how to trade daily buyers and how to find your daily buyers and how to trade your daily buyers. That will be a very simple strategy that people that are still getting into trading can easily learn and get to trade and backtest it is very simple. So let's take a look at this the charts. And before we start, if you are new to this channel, please hit that like button, subscribe, and turn on the notifications so that in the future when I upload more content you'll be notified. So we'll start with how to trade consolidations as a smart money trader. So we'll start with this illustration here. Now let's say we have an uptrend, the market is moving up, and all of a sudden the market enters into a consolidation phase, something like this. So now, as a smart money trader, right, as a smart money trader, what can you do in this case? How can you trade this type of scenario and not be liquidity in this case? So what you should start considering is, if this is the support of the consolidation here, right, and this is the zone that is considered resistance of the consolidation. One should know that according to SMC concept, right, there's liquidity lying under here, and more often you see that price will move below here, gather the liquidity or grab the liquidity when sellers are not when sellers are selling. When sellers start selling, price will move back into the channel, continue up, and the people that bought here will be trapped. The people that sold early will also be trapped. So now, how can you avoid buying early or selling early, right? As a smart money trader, what you should do is, inside this consolidation, there's a lot of liquidity. What you can do here is wait for this liquidity to be taken. Once you see that this liquidity has already been taken, right? You can now use a single candlestick under block to enter here, to enter for a buy. Once this liquidity has been taken and your single candlestick order block has already been formed, you can enter here for a buy. If you have not watched the video on single candlestick order block, just check my previous videos. You will see the video on single candlestick order block. So now, once this liquidity has been clearly grabbed here, you wait for any single candlestick order block. You can buy here and you target the opposite liquidity. Same as the sell here, you can still use this very concept. You sell here, you sell here, and you target the opposite liquidity. It's as simple as ABC. Avoid selling in this channel because you don't know when market will push above. So I'll be going into an example on Go to better demonstrate this for you so that you can understand, right? Now, in Go here, we all know that Go has been ranging in a weekly time frame for some time now. Go had been ranging here for almost some time in this weekly time frame. Now, with on Go, we first had this support here. We had it test 1, 2, 3, 4 before sweeping the liquidity. Right now, what happened here is, how could you have traded here is, when price tested this, and tested it, you could have seen clearly that this was a channel. This was a consolidation, right? A sideways move. So you could have started anticipating your liquidity grab. You could have started anticipating your liquidity grab and moving over to this point here where the liquidity grab actually happened. What you could have looked for is for price to push below this range here. Once price pushes below this range here, you know that this is a liquidity grab, right? Now you're waiting for a single candlestick order block. In this case, where was our single candlestick order block? If you look here very well, if you look here very well, see that this candle swept the previous low of this candle, and the next candle that uh, formed closed above this candle here, closed above this candle. So validating our single candlestick order block. So in this case, this was our entry here. This was our entry zone here to the buy, targeting the opposite liquidity. So this is how your position should have looked like. To target the opposite liquidity as said. This is how your position should have looked like in this case. Now, this many people also know this concept as accumulation, manipulation, and distribution. So if you are somebody that already trade those concepts, they're not really that much different from this, from what I'm showing you here. They're not that more different. So you can, if you learn something from there, which I don't mention here, you can just add this and apply. Same as if you learn something from here, which is not mentioned there, you can add it and apply. Now, coming over to this opposite side here, you could see that this resistance zone here, the liquidity here has been grabbed also. So what are you waiting for in this case? Same thing, single candlestick order block. As you can see, our single candlestick order block is this black candle, and you can see here that it has swept the liquidity of the previous candle, and it has also swept liquidity of this high. Now, what is left now to confirm this single candlestick order block is for this candle and subsequent candles to close below here, which that has not happened. So this has not been confirmed as our single candlestick order block yet. If this has been confirmed, you could sell here, you target the opposite liquidity as well. Remember, what makes you different from trading this channel as a support and resistance trader and trading in this method is liquidity grab. We all know that liquidity is the fuel of the market. Liquidity fuels the market to move. So without the liquidity, the market might as well just be consolidating. For example, if you see here, right, if you see here, you see this move, more of a consolidating move than here. Now you see that when price took this liquidity here, you see that this moves now became more aggressive. These moves became aggressive. That's because the market now has the fuel to move. Now has the fuel to move. So that is how you can trade consolidation as a smart money trader and how you can avoid being trapped in consolidation. So if you learn something from this, please subscribe, like this video, and leave a comment. If there's something I did not mention, you can also leave it in the comment section. I'll cross check all of the comments and I'll reply to each of them. So now let's go into our daily bias topic. All right. Now in daily bias, what we look at is what we look at here is two things, right? The first most important thing is we look at the market direction. Let's say we have an uptrend like the case here. The market is moving up like this case here, from here up to here. Now this you should know that this video is mostly for beginners. This is not for advanced, or these are for people that are still trying to master the strategies that I've been teaching. These are for people that are still trying to master the strategies that I've been teaching, because this one is relatively easier than the other videos. So this is a strategy that you can start using while you're still struggling to master the others that I've been teaching, because I know that the true SMC can be quite a little confusing. Now, what we have here is we have a market pushing up, right? Now you can see that this candle close here and the next candle open here. So what you are basically looking for, if If it happens that this candle that opens here, it first pushes down and takes out the low of this candle. It first pushes down and takes out the low of this candle. What you are looking for here is you're looking for a buy. Once it takes out the low of this candle, you switch into a 15 minutes time frame and you wait for a chalk. Once you get the chalk now, you can buy and target the high of this candle. So basically, a typical example is this case here, right? Is this case here. We had this candle. This candle was the highest in this range, right? Where did the candle close? Here. Now this next candle opened here, took out the low of this candle, and what happened after that? See that the candle push up. After taking out the low, the candle push up to this zone. That's how normally it repeats. That's how to find your daily bias. And you should make sure if you want to trade it, you trade it within the 15-minute chalk. You use the 15-minute change of characters. You can see here we have this bullish example as well. And what happened here is when this candle closed, the next candle opened, took out the high of this candle. When it took out the high of this candle, what are we looking for? Go down to our 15-minute time frame. We wait for a chalk and we sell and we target the low of the candle. That's just how it goes. This is the easiest way to find your daily bias. As if you are somebody that is still struggling to master order flow and the rest, you can use this simple strategy. Find your daily bias very easily, and you can easily trade from this. It's very efficient, especially if you are somebody that you are not just strong in analysis. Because I've been getting comments of people saying most of the concepts I teach, they're very controversial. They're very controversial, guys. It's the concepts I teach. Some people say they're very controversial, and this is because the concept don't fall through under ICT concept. Most of them don't fall under ICT concept. You see, and most of them are not within SMC concept as well. There's a different branch of SMC that is called true SMC. So the concepts are a little bit different from SMC concept, but I can rest assure you that the SMC concept, people that are used to the normal SMC and ICT concepts will see this as a strange topic. There will always be controversial towards the topic, but this true SMC it mostly deals with logic, mostly deals with logic and putting most of the SMC and ICT concepts together. We picked out the best, so that's how true SMC works. So I think we can look for another example of how to find your daily bias. Then that will be all for the video today. Okay, we have this here. So the market, you can see here that this market closed here. The previous candle closed here, and then when this candle opened, it took out the low of this candle. What you are waiting for is your 15-minute chalk at this level. You wait for a 15-minute change of characters at this level. When you switch down to a smaller time frame, you see many candlesticks here. You see many things here. So what you just need to mark out this zone. When you go down to a smaller time frame, you look for a chalk here. The chalk must occur. You will see it is there. And then from here now, you can take your entry base of the chalk and you target the high of this candle. This is a lot of pips. This is a lot of pips. Remember, you are supposed to use your daily time frame. You're supposed to use your daily time frame. I was on the weekly time frame, but you're supposed to use the daily time frame for this, right? You're supposed to use the weekly time frame for this. You can see the concepts repeat everywhere. This repeats here also. So this is a topic that you can backtest